All right, well, welcome to our first of these video little mini casts that we're going to be trying out. Today, the subject we're going to talk about is Washington Capital Partners' newest loan offering. And I have on today Jared Fausnaught, our Director of Sales. So thank you, Jared, for being here to kind of deep dive into this new product and why it's important.
Thanks for having me. This is great.
All right, so to dive a little deeper into what the product is, it is a two-part interest rate, meaning the first interest rate for the first 7 months is held at 6.99% or 7%. That's why we're going to refer to it as 7 for 7 as kind of the promo name. Now, every month after the seventh month, it's going to be an interest rate of 13.99 or 14%. And that remains until you complete the project or you reach the end of your loan term. So the first question I have for you, Jared, is why is the announcement of this new product important right now?
Yeah, it's all about timing. Long story short, everybody knows we're still in the throngs of a global pandemic that has really ravaged the financial markets. As one of the largest private lenders on the East Coast, this has had an effect on our business and many other businesses, many other competitors of ours. And it's really a signal, to the rest of the industry to say we're coming back. We're coming back hard, and things are normalizing. From the really low points in March and April. So this is really huge for the industry in general, to have a rate that is arguably one of the most competitive rates that you can find in quote unquote hard money or private money. This is a competitive product with regional local banks. And it's just a signal to the rest of the market that we're here to compete and we're ready to serve our clients. And so a lot of that's timing. We're just really excited. We had, a lot of people don't realize, but we actually had a 7% product for, our really top borrowers pre-COVID. And so for us, it's just normalizing that and getting back to, offering really stellar products.
Yeah, so in some way, it kind of marks the official re-entry into those low interest rate products.
Absolutely. Yeah. 100%.
Okay. So the second question is going to be, this is actually the second product from WCP where it kind of has that two-step interest rate. Until, the first interest rate takes place, loan hits a milestone, second interest rate takes over until the completion of the project or loan. What is the overall benefit of having that sort of a structure for this loan versus a fixed rate, which is what most people are used to seeing?
Yeah, absolutely. I think the main advantage of this is really just being able to get the lowest rates possible. So, having these structures for us allows us to do that. Um, you know, Fixed rates are great, and we do have those available for qualifying borrowers. But for somebody that may not, have be at the top of our tier as far as how we're qualifying borrowers, it allows them to get in at still lower rates, but with a structure that's more amenable and it really helps on both sides. So if you are faster, you can complete projects faster. That's a big advantage with this. So you can get, basically 8% rates or 7% rates in this particular case. We have another product, we can talk about that later, but for 7 months, if you're in and out of that project within 7 months, you're paying an annualized rate of 7%. So even though there's that back 5 months of basically 13.99%, you're only going to be paying 6.99%, which is huge. So it's very advantageous for people that are moving a little bit quicker, smaller projects. We can kind of get into that a little bit more on which investors would benefit the most from this, but it allows us to get lower rates, bottom line.
Yeah. So biggest key is it basically is providing a different product that's going to make more sense for certain people. And I mean, it's basically simple math at that point of interest.
Yeah, exactly. For what I've seen, my personal experience in the market, having done this for years and years now, is you have kind of two camps of borrowers, right? There's borrowers that are like, I want the lowest rate possible. That's all I care about. I've got a bunch of cash. I might have bought this with cash anyways, but I want to buy more deals and have my cash go farther. Better cash on cash returns, whatever the reasoning is. And then the rate is obviously the most important for them. And then you have another camp where it's like, I want the least amount of money down as possible. Rate is not as important to me. That is the dichotomy in the industry that I see. This product is speaking to those folks that have the track record and the credit and the overall borrower portfolio that really allows for them to get near bank rates. And just to without going on a long tangent here, but the beautiful part about this in relation to the banks is we're seeing, at least in the DC metro area, regional local banks anywhere from 5 to 6% and a point. And it makes a lot of sense for a lot of people to maybe pay one more point on the rate and have a faster turn time in construction, and just overall more flexibility in underwriting and things like that. Maybe a little less money down from banks. You might see 70 or 75%, especially post-COVID, on the LTCs, and obviously LTVs are important as well. So that's really amazing that we can start to compete with banks locally on that level, and provide an alternative solution. There are a lot post-COVID, a lot of business models have been shaken up, and banks are no stranger to that. We're seeing, at least literally just this last week, I've been working to save a couple of borrowers from some local banks that have been doing mergers, and we're talking about 3 to 4 months that they haven't gotten a draw. I mean, that's insanity. I don't know how, I don't know how they're managing the project. So, when there's this merger happening, there's obviously the after effects of that. Then a lot of these banks, they were solely focused on PPP funds and getting all those loans out. And they were basically telling all these investor borrowers, you're not as important to me as all these PPP clients. And it's like, this is basically free money for them in a lot of ways. So, they pushed aside a lot of people. And I feel like a lot of investors, you're just not hearing this in the industry, but a lot of them are upset about this, and they're angry at the banks. And we want to provide that alternative for them, to have another channel where we're not going to take advantage of them like that. So.
Yeah, it's crazy to think it wasn't that long ago that there were these huge dividing lines. There was a massive gap between, hard money and traditional lending. And now rates have kind of crept back over for hard money over the years, closer toward the banks, but they bring all these other benefits that, banks are showing a lot of these, the downsides, and it's amplified right now for a lot of these borrowers that are, considering both. And it's crazy, like you're saying, 3 months for a draw. How are you supposed to work with that?
You can, even if it's a longer project time and you have an 18 or 24-month turn time on your project, maturity time. I mean, 3 months can be the difference of, you selling out all your units if you're doing condo conversions or multifamily and not selling. So it's huge. And that means not only that, but if you're going to get an extension, they're probably going to hit you with extension fees. So, I mean, in this particular instance, basically they didn't get back to this poor guy in 3-4 months, and then his loan matured and they said, where's our payoff?
Yeah.
And now here we're going to charge you when we didn't even respond to you for 3 months.
They created the issue, and then he had to pay for it to them.
Yeah, exactly. So that is what we're trying to save those folks, and that's an extreme situation, but there are plenty in between that in a variety of situations that I think we can help with. So.
Okay, well, this whole conversation kind of dovetails well into the next question here, which is, who stands to benefit the most from these sort of products, and specifically even this newest, 7 for 7 promo? Who's the big winner here?
Yeah, there's a couple, so we can kind of dig into this. We definitely are more interested in focusing on single families. It is obviously a riskier product for us. So in mitigating that risk, we like to see more so projects that are single families, gut rehabs, things like that. Over time, I know that we'll be looking at rolling this out for bigger projects, multifamily, condo conversions, things like that. Over time. But it helps a couple people. So one, it helps people that think that they can be in and out of a project in 7 months, and are willing to bet on that in a sense, based on their GCs and their team that they have around them to be, their agent, and also the fact that the market is so hot right now. There's so little inventory. So frankly, it's not really that hard of a bet. I mean, this is about as good of odds as you could possibly get
Yeah.
that you're going to finish in 7 months. The unknown is really the permitting, right? Everybody knows that. DCRA is super slow. Some of the surrounding counties, PG County and Montgomery County, are a little slow. But even with that, if it's a single family house, you should, even with 2 or 3 months of permitting, be able to complete that and sell within 7 months. Even if you're over just a little bit, say you're at 8 or 9, your blended annualized rate is really not going to be all that much higher if you happen to go over. And we should just really emphasize that this isn't a 7-month loan; it's a 12-month loan.
Yeah.
So there's no extension fee. It literally just is a rate adjuster up, and so you have a pretty decent runway. So it's for people who think that they've got a machine, they know how to do it, they've got the right people around them, and they can get the job done in 7-8 months, something like that. So that's a really big thing. And that's, that includes DC, that includes Southern Maryland, Northern Virginia. We're focused on that. It's not as much for, more rural areas. It's a little more risky for us there, but definitely, within the Beltway, that's where we're really wanting to focus more heavily on that product. And we have other very, very similar products to this, only a percentage, point away, so to speak, that we have more flexibility on. So the options are there. Another option are for higher level developers that are looking to acquire properties that need to get them entitled, plans and permits, and get them shovel ready. One popular thing to do in DC these days are entitlement plays, where developers are acquiring, they're putting all their value up front to acquire the property, to work out any issues with tenants and other things like that, get the asset on their balance sheet, purchased with, an acquisition only loan from us, and then refinance that out with a construction loan takeout with another lender. Maybe they want to do it with a bank and they want to keep a really low rate. Obviously they'll have a much larger loan with the construction takeout. And that's awesome. They can do that. They can acquire the property faster than the bank would allow them to acquire it. On the very short end, we're doing 5-day turnarounds. If everything is clicking, average is 10 to 14 days, but it's really never longer than 14 days. So we can move lightning fast. We've got pre-approval letters that will get you, within 30 minutes of you letting us know, so you can attach that to your offer. We speak to listing agents all the time to kind of make sure all their questions are answered, and again, help add that value so that you can win the deal. And really just allow them to acquire, and the flexibility to do that. And if you're at a 7% rate and you're going to get the takeout within 7 months, then, I mean, that's amazing. You just saved yourself so much money. So those are the two big ones. The people that are that think they can get it done in 7 months, and then the acquisition only. I do think this product will morph over time, will evolve for the right developer borrowers that really have a huge track record, great credit, and everything kind of aligns. I do think that this will become even a product that we can use in larger construction scenarios with condo conversions and things like that. So I'm very excited for the future of this product. We literally just rolled this out. It's got a long life ahead of itself. So.
Well, that's great. And that's another thing that is a good thing to cap off on, is that this is a new product. This is not a promo that expires at the end of the month or anything.
Yeah.
So as you mentioned, this is a product that has longevity. More people are going to start benefiting from it as we really carve out different sectors who want to utilize it for. Um, and yeah, it's as we went over for these things, it's another option that a lot of other lenders aren't considering, not offering, that a ton of people benefit from. And maybe this would help. That's what the intention of this video was, and the conversation with you is to further carve out what it is, who it benefits, and why it matters to offer things like this instead of just sticking to the tried and true fixed rate and that's it.
Exactly. Yeah. I mean, for us, we've always been an innovator in the space. We were probably the first group to really cut. I mean, this is going back 5, 6 years. I mean, when rates in hard money was 12 and 3, still 12 and 4. I mean, we were one of the first groups to go down to 10 and then 9 and 8. And an industry leader in the DC metro area, and now we're expanding. And we're going to continue to do that. We're going to continue to be a force in the market. We have a pretty good market share, and although there are some investors who have kind of moved to the sidelines, we're seeing a lot of that volume come back pretty heavily. And there's a lot to be excited about. I mean, it's amazing that even through this pandemic, we're seeing such strength and stability in the real estate market, especially in residential real estate. And it's immensely promising. There's such low supply in the DC area. We live in such an amazing sub-market, and we have a lot to be thankful for. So that's the message here. We're excited to get back to normal, and really look forward to helping a lot of our past borrowers who may be interested in this. And if this product doesn't make sense, we've got a whole boatload of other ones to be able to offer. So.
Well, great. I think we can't cap it off any better than that. So
Yeah.
thank you, Jared, obviously, for taking time to really dig into this new offering and for being kind of the guinea pig, obviously, for these new mini casts or lunch and learns, whatever we ultimately want to call these. So I appreciate your time, and hopefully folks will get some real use out of this new product.
Yeah, happy to do it. Again, I really appreciate the time. If anybody has any interest in this, we may be posting this on social media. So, please reach out to a loan officer. If you're already working with somebody, reach out to the website and input any deals that you may have. We have people standing by to be able to analyze your deals, get you underwriting, completely complimentary to you, and get you numbers over so you can better make your decisions on what deals to purchase.
Yep. So if you're seeing this on social, go ahead and click the link in our profile bio, and that'll send you straight to a landing page so you can get an underwriting for this specific product. So thank you everybody for watching, and we'll see you on the next one.
Thanks again.